Hi, Steve Sosnick with today's Interactive Brokers Midday Market Update for Thursday, September 2nd, 2021. It's actually a really nice day here in Connecticut, which is really talk about the sun coming out after a big storm, because at my house we had 6 inches of rain yesterday, but thank goodness, other than a couple of minor leaks, no big problems. I can't say the same for many friends and colleagues. And I hope everybody, if you are anywhere where Ida's been recently, are doing okay, because I know it was a big swath of problems. You wouldn't know that from looking at the markets, of course. Another day, another rally. Why? You could say that the economic numbers this morning were pretty good. The weekly jobless claims were among the lowest we've seen in quite a while. And you can certainly paint the picture that the economy is on the comeback trail, but I don't really think I think that's actually a fig leaf. Markets were up yesterday in the morning for no apparent reason other than, I believe it was just sort of the usual first of the month enthusiasm. I did some work yesterday. I'll probably put it out closer to the beginning of next month, but I did put some statistics out on Twitter yesterday. And there's really no statistical significance to this buying the first of the month. You could argue that there is a slight bias toward money coming into the marketplace, but I think a certain amount of it is actually self-fulfilling, where the futures get off to a good start because it's the first of the month, and then sort of have to disprove it. And actually, yesterday they did. They just sort of faded all afternoon. I think it's very interesting. I really get the sense that markets are just sort of, I don't even know how to put it. Sorry for sort of the breathy pause there. Markets are just sort of on this must-buy everything mode, and we've talked about it at length. It's really a momentum-driven stock market at this point. I wish I could tell you otherwise. Yes, the earnings are fine. Although what we see is a lot of times, we're starting to see companies whose earnings, where the whisper numbers have outpaced reality and come down to earth. The latest today being Chewy, and so we're starting to see that. I look at cryptocurrencies as sort of a proxy for systemic risk tolerance, and we see Bitcoin flirting with the 50,000 level, and it's really been actually remarkably stable within a range around sort of the high 40s to 50,000 range, which means that at least there's a fairly good risk tolerance for this sort of stuff. And I find it interesting. I did see a story this morning that a lot of the most speculative traders have moved on to NFTs as opposed to stocks and options. God bless them. I think I'd still rather have something tangible. But I guess you can argue that an NFT is tangible. But NFTs are specifically not, there's no earnings power behind them. Whereas if you buy a company, you have a claim on their future earnings and dividends. If you own an NFT, it has to appreciate or not on its own merit. That doesn't mean it's a bad investment. Art falls into that same category, and a lot of the best art is a wonderful investment, but there's a lot of ways to lose money by buying art as well. So, but I take that more to mean that this is not like art connoisseurs buying fine paintings. This is just very liquid people moving into another area where you're just essentially gambling that you're going to buy something that someone else will buy from you. That's often referred to as the greater fool theory. I won't go so far as to call people who invest in NFTs and cryptocurrencies fools. That's not my goal. That's not true. But if you are investing in something simply because you hope that someone will pay you more for it, without any reason to believe that they should pay you more for it, that is what the greater fool theory refers to. And I have to urge people to think about what they're doing when they engage in something like that. Do you want to argue whether Apple above 150 and up another percent or so today is overvalued or not? We can have that argument. But I will tell you that Apple is an earnings machine. And so we can debate how we value that earnings machine and how we value their future cash flows, which at least for the foreseeable future are quite substantial. But that's a matter of degree. We will not sit there and argue that. I don't think any argument would encompass the idea that Apple is potentially worthless. There's a value to it. We can differ as to what that is. We can argue whether the market is appropriately discounting antitrust and other risks. I get all that, but as opposed to, let's say, an NFT of a cute penguin, it may be worth what you pay for it. You may get whatever the value is from enjoyment of that. But if you're buying it just because you think someone else will buy a kooky, fun penguin, not necessarily the best investment strategy. Anyway, so we got the jobs numbers tomorrow. We put out a piece yesterday, which I urge you to read, about why the ADP numbers are often a poor precursor to the non-farm payrolls numbers. Essentially, I think the market was banking on that because the ADP number was missed by a wide margin yesterday. It was not even close to expectations, 340 versus 625. And yet the markets more or less took it in stride, as I mentioned, up throughout the day, with the exception of a late swoon. And so, this raises the question, is all good news good news? Are we in a nihilist market where we can ignore anything inconvenient? I think this all comes into play. I also do think that is one of these environments that ends abruptly and without warning. And that's my fear, and that's why we see continued hedging, continued buying of volatility products to hedge against the potential that this could all come unraveled very quickly. Right now, the market is taking in stride the likelihood of a taper, the potential for higher taxes, the news that Google was going to be investigated for Alphabet. Was going to be investigated yet again for an antitrust violation. That stock is off a whopping 0.4% right now. So all this news is being taken in stride. At some point, it's likely to matter. But I guess as long as the money is flowing, it won't. Have a good day, everybody. Bye-bye.